In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a Bloomberg scoop. It has been a bumpy ride for Lyft and its C-suite, why the company's COO is leaving, and how the founders plan to split up the job. Plus, U.S. Federal Trade Commissioner Rebecca Kelly Slaughter joins us to discuss why she voted against the FTC's record $5 billion fine on Facebook. And directing intelligence, Dan Coates is leaving his job as the U.S.'s chief spy. The president's pick to replace him has been polarizing and some say political, what that could mean for national security. But first, to our top story. An executive shakeup at Lyft. Chief Operating Officer John McNeil is leaving the company after joining just last year from Tesla. McNeil spent 2.5 years at Tesla, where he served as president of global sales and service. Lyft founders Logan Green and John Zimmer say they won't hire a replacement. Joining us with more, Bloomberg Tech's Mark Millian. So why is he leaving?
Why is he leaving is a very good question that we don't quite have the answer to yet. But it's an intriguing situation. He didn't even last 2 years there, and he was in one of the most high-profile positions at the company. But this is also a situation where you're a very experienced executive who's coming in with the mandate to oversee operations, but you also have two founders of the company that are sitting right there with you and have a lot of ideas about how the company should be operating. We note in the story that John McNeil's predecessor as COO, Rex Tibbins, who came from Amazon, he also didn't last 3 years there. And so there are questions about whether they could sustain somebody in that role, and I think it may be telling that they don't plan to try to hire another COO.
So Lyft shares are down, by the way, 11% since the IPO. What is the plan?
They need to outline that, and they'll have earnings in about a week and a half, and we'll find out more. I should say they probably won't have earnings. They won't have profit, but they will disclose financials in a week and a half. So we'll find out more there. But the plan is that they're still somewhat in growth mode. They're spending a lot this year, expanding throughout the U.S., where they have a huge presence. They have just a couple locations in Canada, but there's a big world out there to expand to. Eventually, investors are going to press them for profit, and they haven't quite outlined how they're going to get there.
They did say that this would be the peak year of spending. Of course, we'll see if they stand by that commitment. That's something that Uber hasn't committed to. Uber, meantime, is laying off 400 people in its marketing department. What do we know?
Yes, they're cutting the marketing department by a third globally. So that's 400 out of 1,200 people. That's
a lot of, I mean, if those are all, as far as they might believe, extraneous people, that's a lot of people. That's
a big scale down. Yeah, the CEO put out a staff-wide email that we reported on that talks about how they saw the company had been slowing down, had too many people, and too many people were overlapping in responsibilities, and so they've ordered a cut. And something that he says in the memo is that he sees this, it's indicative of a larger problem, which raises the prospect that maybe there will be more cuts to come in a company of something like 24,000 employees.
All right, well, we'll be watching for that. Mark Millian, Bloomberg Tech, thank you so much for that update. Meantime, trade negotiations between the U.S. and China are set to resume on Tuesday. U.S. Treasury Secretary Steven Mnuchin and Trade Representative Robert Lighthizer will meet the Chinese delegation in Shanghai, with both sides showing little desire to compromise. And on Friday, President Trump seemed to indicate a deal could be a ways off.
I think that China will probably say, let's wait. It's 14, 15 months till the election. Let's see if one of these people that give the United States away, let's see if one of them could possibly get elected. And I'll tell you what, when I win, like almost immediately, they're all going to sign deals.
For more, let's get to L.A., where Bloomberg's Sarah McGregor, our trade reporter, is standing by. So, Sarah, if both sides are showing little indication that they're willing to compromise, what should we expect when these talks resume?
It's really hard to know right now. That's the million-dollar question. We know from the U.S. side, they want to start off from where talks broke down in May. They want to sort of rehashed that document they said at the time was 90% complete. And of course, as you remember, the U.S. blamed China. They said that China reneged on some of the promises that it made in this draft agreement. But so it's really hard to see if they're starting off from the point of dispute how they're going to find a way forward. But it is a positive sign that they're going to Shanghai, that they're resuming these talks face to face. The first time they'll meet in about 3 months since they broke down. And I think, we'll be all carefully watching for their words. From the U.S. side, we'll be looking for compromise, perhaps, on rolling back tariffs that have been put in place, which was a key Chinese demand. And from the Chinese side, we'll be looking for, those promises of addressing IP theft and some more of those economic reforms.
Are there some points where we expect they might be able to find some common ground?
Well, for China, the easy answer has always been farming purchases. And we saw China this week say, we're going to agree to make some of as a goodwill gesture to buy more soybeans and pork. But, this is not enough for the Trump administration. So that's sort of the easy pickings. That's the ground that they seem to cover time and again, are always able to get a few concessions from. We saw a little bit of easing on the U.S. side from Trump on the Huawei issue. But, I think in this time, they've also sort of hardened their positions, and there's more investments restrictions coming down the line. Tariffs have escalated. And so I think in that way, there seems to be much deeper divisions than there are areas of common ground right now.
Now, there are some areas where we might consider setbacks. Beijing has called the U.S. the black hand behind the protests in Hong Kong. Meantime, there is this simmering issue with FedEx, where FedEx said it accidentally redirected some Huawei packages to the United States. Beijing isn't buying that. What's the status of that situation?
Yes, China actually has kind of gone deeper into that and said it was a bit more nefarious than even they thought to begin with in this FedEx issue, and it's still being investigated. So I think if you kind of look on the surface level, it's the two countries are saying, let's sit down and chat, but the issues like this just keep cropping up. And another clear example to add on top of that is Trump on Friday saying within 90 days they're going to investigate at the WTO countries that are labeling themselves as developing, which China includes, and that gives them special trading rights. The U.S. thinks it's time well past of China being a developing nation and other nations as well, and they want to sort of pull that status from them, and that would be huge. That would actually have a really big impact on, China's global trade. And so, these issues, these practical issues seem to be piling up on one side, and on the other side we have them saying, let's chat and let's try and come up with an agreement, and it's really hard to see where they're going to come together.
All right, Bloomberg's Sarah McGregor, you will be watching these trade talks as they resume, and I know you'll keep us posted on any headlines as we have them. Thank you so much. Coming up, the U.S. FTC has slapped Facebook with the largest fine in history for privacy violations. But will Facebook really learn its lesson? Next, we will talk about it with a dissenting FTC commissioner who says the fine is not enough. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Last week, the U.S. Federal Trade Commission formally announced the details of its $5 billion settlement with Facebook for years of privacy violations by the social network. As part of the deal, Facebook must submit to oversight from an independent board committee, as well as new privacy certifications and assessments. But while the fine is the largest ever imposed by the FTC for privacy violations, many lawmakers and privacy groups are arguing the company got off easy. Joining us to discuss, U.S. FTC Commissioner Rebecca Kelly-Slaughter, who voted against the agreement. Commissioner, it is, as I said, the biggest fine the FTC has levied in history. Why do you think it's not enough?
Well, thanks, first of all, for having me. Listen, I voted against the Facebook settlement because I thought when you look at the terms taken as a whole, not just the fine, but also the injunctive relief, I wasn't convinced that it would do enough to change Facebook's behavior and make sure that in the future they kept their promises to the FTC and to their consumers.
So what would have been better? Finding Zuckerberg directly? I know you've also suggested the FTC should have actually sued Facebook, should have sued Zuckerberg perhaps personally.
Yeah, so I think you have to look realistically at what our options were. And here, I think it would have made a lot of sense to take Facebook to court and to say, you may not agree to a settlement that we think changes your behavior, so we're going to pursue the kind of terms that we care about in court. And open litigation in a public court of law would provide transparency and public accountability that I think are missing from the settlement. And I also think the settlement is missing meaningful limits on how Facebook collects, uses, and shares data. And I would have really liked to see that.
Now, suing Facebook directly would have been a riskier path, wouldn't it? You could have risked losing that suit.
I agree. And if you think that the entirety of the point of litigation is the outcome at the end of the day, the remedy that we can get, and you think that the remedy in this settlement was enough to change Facebook's behavior, then I can understand supporting it. But if you don't think the remedy changes their behavior, then you can think about other advantages that litigation could have in terms of public accountability, public transparency about what the company did and who knew what within the company. And at the end of the day, we, the FTC, are not a private corporation. We're not just making an expected value calculation about the end result of litigation. We are trying to work in the interests of the American public, and we have an obligation to seek justice, even if we're not guaranteed to achieve it.
Now, I did speak to your colleague, Noah Phillips, told him about your response to the deal. He voted in favor of the deal, of course. Take a listen to what he had to say about your suggestion that a lawsuit would have been a better route.
I don't think that's an accurate characterization of the state of play. The remedies that we have achieved, both financial and injunctive, meaning the changes that we're making to Facebook, are very unlikely to have been achieved through a court process. In a normal litigation, what you're weighing is the certainty of less against the chance of more. In this case, what we were facing is a decision between the certainty of more and the uncertainty of getting even less.
What's your response to that, Commissioner?
Well, respectfully, I disagree with him. I don't think that the terms on the table in the settlement were enough to guarantee that Facebook's behavior would change, or even necessarily to make it likely, because it didn't impose any public accountability or transparency or any meaningful limitations on how Facebook uses data. So I would rather take the chance in court, and I actually think the process of public litigation can make a big difference to how a company behaves. If our goal in bringing an enforcement action is deterring the company from doing something wrong and deterring other companies from doing something wrong, the prospect of a public trial can have a very effective deterrent effect, even if the remedy at the end of the case may be different from what you could get in a settlement.
What about Zuckerberg personally? What kind of punishment or more extreme sort of penalty would you have liked to seen on him?
Well, again, I think the thing that I am going for here is public accountability and transparency. The settlement that the FTC entered into excused Mr. Zuckerberg and all other officers, directors, executives at Facebook from any liability. And I didn't think the investigation that we did justified that excuse. I didn't think we had a basis to say they should have no liability. So at a minimum, I would have liked to see some transparency, some testimony, some documents in court that gave us better insight into whether liability was appropriate.
Now, are you concerned that Facebook won't learn its lesson? I mean, do you think that Facebook will simply slide back to its original state of play? And, you know, given that there's no structural changes to the business model here, things will just go back to the way they were?
Yeah, fundamentally, that is my concern. I mean, and I think that's why it is important for the FTC to be using the tools and resources it has, limited as those may be, to fight as hard as we can to change the behavior of companies that are breaking the law and teach them a lesson that it's not worth doing it again in the future, and they can't simply pay a fine to make us go away.
Now, meantime, the FTC has opened an antitrust investigation into Facebook. What can you tell us about that investigation, or at the very least, your position on whether Facebook is too big?
Unfortunately, I can't tell you anything about the substance of a particular investigation, this or any other. I do think that the FTC has an obligation to look into questions of antitrust violations. Those are often going to be by big companies, and open investigations where it's appropriate to do so.
How about an investigation that's reportedly been settled, YouTube and potential violations of the Online Children's Privacy Act?
Again, I can't comment on any investigation that hasn't been publicly confirmed by the company or the agency itself. So no confirm or deny that there is an investigation there, but I think in all cases, children's privacy is something we need to take really, really seriously. I'm a mom of 3 little kids. I see how my kids already interact with the internet. It is a very scary place. I think it should be a huge priority for the Commission.
So as you've got lawmakers on Capitol Hill calling for the breakup of big tech, you've got Senator Elizabeth Warren making this the centerpiece or one of the centerpieces of her presidential campaign. She's getting support from both sides of the aisle. What do you think the FTC's role will be in this discussion?
Well, I hope that we can live up to our obligation to protect consumers and protect competition. I don't think this is just about big tech. I don't think it's just about tech. I think there are competition problems and concentration problems across the economy. That's something that we are charged with dealing with and that we should deal with. And I welcome the conversation on Capitol Hill and the attention in the public and the political bodies about how important and how dangerous concentration can be across our economy.
All right, U.S. FTC Commissioner Rebecca Kelly Slaughter. Commissioner Slaughter, thank you so much for joining us today.
Thank you for having me.
All right, coming up, just what are investors watching for from Apple's third quarter results? We'll preview the iPhone maker's numbers next. This is Bloomberg. ETF investors have about $58 billion riding on Apple's third quarter results. According to a recent report from Bank of America, the iPhone maker is the second largest holding across U.S. ETFs after Microsoft, which owns about $70 billion. Apple reports earnings after the market close Tuesday. And speaking of Apple results, all eyes will be focused on how the company is faring amid the ongoing trade war between the U.S. and China. While Apple continues to push into more service offerings, Bloomberg data is predicting about a 10% drop in iPhone sales in the third quarter. But on the other hand, there looks to be a rebound in other segments like the iPad, Mac, Apple Watch, to the tune of a 14% bump in sales. To tell us more, in LA, we've got Bloomberg tech reporter Mark Gurman, who covers Apple, and in studio, Maribel Lopez, founder and analyst at Lopez Research, a market research and strategy consulting firm. So, Maribel, one thing we won't hear tomorrow is iPhone numbers because the company stopped reporting those a couple of quarters ago. Yes. But what are you expecting?
I'm expecting it's probably going to be down single digits, and that's actually no surprise. We've been following this industry for a while, and smartphone sales declines is consistent across the industry.
iPhone revenue in particular will be down single digits, or Apple revenue overall?
We're looking at the sales of what would have been units is what we were projecting.
Okay, so what do you think is driving that?
Basically, there hasn't been the right amount of innovation in the space for the cost point that we're looking at. And frankly, everybody just has a phone, and they don't really need a new phone right now.
So, Mark, does that jive with what you're seeing?
Yeah, mostly. We're expecting iPhone unit sales year over year to be down about between 3 and 4 million units. Overall sales are likely to be around 53, 54 billion, so coming in either a little bit higher, a little bit lower, or pretty much flat. And remember, Apple was once this high and mighty company that could do no wrong and not have, annual or quarter or consecutive sales drops. But now it's very possible that this third quarter results will be the third consecutive year-over-year drop for 3 quarters in a row. So we'll see what happens tomorrow.
Maribel, what are you expecting in China specifically? We saw earlier this year sales sort of fall off a cliff, but then they kind of stabilized in the next quarter. Where will we land this time?
I think in China, it's really hard to tell, but there are credible options in the Chinese market. And I think the real thing we need to look at with Apple is their transition from hardware to services. Those are the numbers to watch because that's a strategy that they're playing hard regardless of the geography right now.
That said, and Mark has made this point many times on the show, you need to get devices into hands in order for users to access those services. So doesn't how much the iPhone sells still matter?
It does, but they're also leveraging that $1.4 billion that they talked about last quarter that's already in the market that you can deliver a lot of services to. So I think we need to really closely look at, is that transition happening? And that actually is a fairly good margin business as well.
Meantime, Mark, you've already done some reporting on the new iPhones that we're expecting to be unveiled in September. If I recall correctly, incremental design upgrades, a better camera, but the real design overhaul will come in 2020, right?
Yeah, it's 100% right, Emily. This year's iPhone upgrades might be considered one of the smallest year-over-year upgrades in the iPhone history. Of course, I said that last year. The iPhone 10 to 10s jump wasn't really a big upgrade, and I think we're going to see a similarly small upgrade again. This year, the focus will be on a third camera. The question is, are people going to spend $1,000 to upgrade from the iPhone 10 or 10s to the iPhone 11, or whatever they choose to call it, just for a third camera on the back and a slightly faster processor? Personally, obviously, there'll be an early adopter crowd that does, but I really don't see too many leaps from $1,000 phone to another $1,000 phone for such a minor incremental leap.
Now, go ahead.
I actually think the thing to watch is the watch. And the reason for that is 80% of millennials said that health was their key initiative and looking for ways to track that. Apple has been doing deals with insurance companies. It's been building an ecosystem around it. I actually think that health and fitness is one of the futures for the company, not just smartphones. And we might see in September the separation of that from the actual iPhone to be used on any device.
So more untethered experience.
Untethered experience would be a good move for Apple at this point.
Mark, have you heard anything about that?
I don't think that's going to happen this year. I also don't think that there's going to be a significant update to the Apple Watch this year. I think they really positioned last year's update as a complete overhaul. That's what they said. That's what they showed. You know, visually looking at it, it doesn't look too much different. But when they use those talking points, calling it completely redesigned, completely re-engineered, you know there's going to be a 2 or 3 year gap between significant changes from that model.
So, Maribel, quickly, Apple Card, the new credit card service, Apple Arcade, the gaming service, Apple TV Plus, the Netflix competitor, Apple News. Which of those services are you most excited about?
I'm actually most excited about the health services, and the reason being is I think the card actually does more for their bottom line than it does to actually change the industry in terms of maybe changing their processing fees. In terms of the content, plenty of content choices. I think content's table stakes. You need to be in it. I think they'll do a solid showing. I don't think that's what's going to drive it. I think they need to find fundamentally new revenue streams that are related to health or possibly something else.
All right, Maribel Lopez of Lopez Research, thanks so much, along with our very own Mark Gurman. We'll be all over Apple earnings tomorrow. Coming up, Dan Coates out as the Director of U.S. National Intelligence. We're going to look at what his replacement plans to do to safeguard the 2020 elections if he gets through Congress. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Some of the most well-known tech companies weighed down the S&P 500 Monday. Amazon, Facebook, PayPal, Alphabet, some of the biggest laggards on the index. This as we await earnings from Apple Tuesday. When you take a step back and look at the bigger picture, though, large cap index, the NASDAQ 100, has made quite the comeback in 2019. Joining us to discuss Bloomberg Opinion's Shira Ovide. Shira, you've got a column out entitled Tech Anxiety Retreats into Semi-Distant Memory. Do you think it's really a semi-distant memory, or could it come back anytime?
Oh, yeah, it absolutely could come back anytime. But it's just a reminder that just at the end of 2018, the tech stocks just got hammered because of all of this anxieties about slowing growth, about trade war with China, about antitrust, all kinds of things that went away for a few months and then came back after first quarter earnings. And now we've completely forgotten about it because there were, in many cases, these very good, very strong second quarter results from a lot of the big tech names. At the same time, we had these announcements about antitrust investigations from the Department of Justice, the FTC. So it was sort of this strange juxtaposition of strong results, these kind of far-off worries about potential impact of antitrust investigations, and the end result, for the most part, was the tech stocks went up.
Now, what I also find curious is that when most of the analysts and investors I've spoken to aren't concerned about antitrust. When you talk about the DOJ, the FTC looking into big tech, they think it's going to be a blip. Is that misplaced?
It's hard to know. The problem with any kind of regulatory or legal risk, right, is that it's very hard to quantify. It's hard to know at this point if investigators are just now starting their work on antitrust matters, what's going to happen, right? That it could be they find some incriminating evidence as they dig through, emails and do depositions and talk to competitors of these tech giants. It's also possible that this sort of drags on for years and years and nothing really happens, as was the case we saw with the FTC investigation of Google that ended in 2012 or 2013, and also arguably this recent FTC matter involving Facebook. So it's hard to quantify. It's kind of an unknown risk. But I agree that for the most part, investors are sort of saying it's a risk, but we can't really worry about it.
All right, we've got Apple earnings to come and, of course, another quarter. What are you watching? What's next?
I mean, look, the thing that really matters for all of these tech companies is growth. Right, that investors want tech companies to show revenue growth. That's going to be increasingly important as the Fed officials and monetary policy in general starts to shift more and more to lowering interest rates. And that means that growth stocks are going to be even more important because investors have a hard time finding yield anywhere else. So the only thing that matters right now is growth. And the issue with Apple right now is that it's not growing.
All right, well, looking forward to your analysis of Apple as the earnings cross tomorrow. Bloomberg Opinion, Shira Ovide, always good to have you with us. Let's switch gears now to U.S. national security, specifically to a shakeup at the top of U.S. national intelligence. Dan Coats, the man in charge of tying together all of the U.S. intel agencies' efforts since March of 2017, is resigning. President Trump took to Twitter to announce his successor, Congressman John Ratcliffe of Texas, and Twitter is where Senator Chuck Schumer announced his opposition to the pick, saying it's clear Representative Ratcliffe was suggested because he exhibited blind loyalty to Donald Trump with his demagogic questioning of Mueller. If Senate Republicans elevate such a partisan player to a position requiring intelligence expertise and nonpartisanship, it would be a mistake. To discuss, in Washington, we've got Bloomberg's Bill Ferries, who leads our national security coverage. So actually, Bill, you had folks on both sides of the aisle praising Dan Coats, talking about even Senate Majority Leader Mitch McConnell, talking about how this should be a nonpartisan position. What do we know about whether Ratcliffe will, in fact, make it through the Senate and take this job?
It's going to be an interesting pathway for him. It's going to be a tough one. The reaction, as you mentioned, from a lot of senators, including many Republicans, is that they really don't know much about Ratcliffe at all. He raised his profile a little bit during the Mueller hearing last week when he offered some very harsh questioning of the former special counsel. We know the White House was looking at him at one point as a possible replacement for Jeff Sessions as Attorney General. That job went to Bill Barr. But Ratcliffe is not a very well-known personality. He's a third-term congressman, a former mayor of Heath, Texas, which is a suburb of Dallas. And there's a lot of concern about whether he will be someone who is independent-minded and stand up to the president when he has intelligence issues to deliver that maybe the president doesn't want to hear.
Now, to recap Ratcliffe's questioning of Mueller, he agreed with the president that the special counsel's investigation was a quote-unquote witch hunt. He said discussing Russian interference in the election was merely a way to invalidate the election. However, Dan Coats himself last year had this to say about Russian interference in our democratic process. Take a listen.
In regards to Russian involvement in the midterm elections, we continue to see a pervasive messaging campaign by Russia to try to weaken and divide the United States. These efforts are not exclusive to this election or future elections, but certainly cover issues relevant to the election.
That was Dan Coats in November of last year. This is Bob Mueller last week on Russian interference. Take a listen.
In your investigation, did you think that this was a single attempt by the Russians to get involved in our election, or did you find evidence to suggest they'll try to do this again?
No, it wasn't a single attempt. They're doing it as we sit here. And they expect to do it during the next campaign.
That, Bill, was one of the more poignant moments of Mueller's testimony. How will this Russia issue play out in Ratcliffe's confirmation, given that we seem to have broad agreement among U.S. intelligence agencies that the Russians did interfere in our election?
Absolutely. It's really not an issue that's questioned in the intelligence community at all. And I think that that clip you just showed from the Mueller hearing is one that we'll see replayed if, in fact, he does get formally nominated to the Senate and has a hearing. And, you know, that's not a 100% sure thing either. The Senate is leaving this week for its August recess and won't be back until September. So it's unlikely the White House would even send this nomination up for consideration before then. And that's going to give Republicans and Democrats here a lot of time to figure out who is he? Who is this nominee? What does he stand for? Would he be independent? And we've seen in the past the president has made nominations or announced nominations that never get sent to the Senate or that get replaced at the last minute. But I think it will be a very contentious hearing. Dan Coats was passed by the Senate when he was nominated in 2017 by, I think, about 85 votes in favor. So wide bipartisan support. It helped that he was a former senator, of course. But I don't think we're going to see anything near those numbers when the new Director of National Intelligence gets nominated.
Meantime, there's been fresh reporting that the Russians managed to hack the election systems in all 50 states. House Majority Leader Nancy Pelosi had this to say about the ongoing level of security and security threats. Take a listen.
Report showing that the election system in all 50 states were targeted by Russia, and yet the president calls this a hoax, and Senator McConnell refuses to act.
So if, let's say, Ratcliffe does end up in this position, somebody who believes that discussion of this is merely an attempt to invalidate the election results, what does that mean for our national security?
Well, I think, you know, you're raising the key point, and it's also the kind of issue that we're going to hear a lot of questions about in a hearing if John Ratcliffe gets that hearing to begin with. You know, the intelligence community is on the front line of this threat. The thing that I think a lot of senators on both sides of the aisle liked about Dan Coats was that when President Trump made a charge in public that he thought was wrong, Dan Coats got up there and defended the intelligence community and its work and really didn't bow to any of the political pressure. It's one thing, I think, to pick a cabinet member like a Secretary of State or a Secretary of Labor or another position where you are really politically bound to the president and carrying out his agenda. I don't think anyone expects the intelligence community to follow politics. They expect the intelligence community to really present the facts as they are, lay them out for the president for decisions to be made. So the questioning of John Ratcliffe is going to be, can you be an independent person? I think what some of the president's supporters will say is, look at Mike Pompeo. He was a three-term congressman from Kansas, not very well known, was a bit flamboyant or outrageous on the Benghazi hearings, and turned out from the administration's point of view to be a pretty good CIA director and Secretary of State. Obviously, not everyone agrees with the policies there, but I think that's the model people in the White House are looking at, saying, listen, yes, he was a member of Congress and he did what you have to do as a member of Congress to stand out. When he gets to the intelligence, when he gets to be the head of the intelligence community, he'll do what's expected of a member of the intelligence community. But that's going to be the key question coming up in his hearings if, in fact, the White House does send his nomination to the Senate.
All right, Bloomberg's Bill Ferry, you'll be covering the drama for us. That will most surely ensue. Thank you so much. Coming up, as Libra backlash continues, the U.S. Senate is planning yet another hearing on cryptocurrencies. And one industry leader, Ripple, wants to make one thing clear. Not all cryptocurrencies are the same. What to expect from Tuesday's hearing? Next. This is Bloomberg. Cryptocurrency will be up for debate again on Capitol Hill this week. The U.S. Senate Banking Committee will hold a hearing Tuesday to discuss regulatory frameworks for cryptocurrencies and blockchain. This after the committee held multiple hearings regarding Facebook's Libra digital coin. Ripple, one of the leaders in cryptocurrency, wrote an open letter to Congress ahead of the hearing asking for fair regulation. The company said, please do not paint us with a broad brush. Many in the blockchain and digital currency industry are responsible actors. We are responsible to U.S. and international law and responsible to serving the greater good. Joining us to discuss, Ripple's Senior Vice President of Marketing, Monica Long. Look, Monica, Congress was not excited about cryptocurrency last week. A lot of skepticism. How do you expect to change lawmakers' minds?
You know, I think it's about helping them to understand that we are at a critical crossroads here in history where regulation in the U.S. that ensures responsible actors can use these technologies in a way that you know, continues innovation, will set the U.S. up for global leadership, much like you know, global regulatory frameworks did in the 90s with the internet.
So Brad Garlinghouse, your CEO, was on the show last week, talked about how Facebook's Libra plan was a little bit presumptuous, a little bit arrogant. How concerned are you that what Facebook has done here could actually derail plans for Ripple and other crypto players, given the regulatory pushback?
Most certainly, Facebook's Libra white paper has turned the world's attention to the digital currency and blockchain industry. But Facebook shouldn't speak for the industry, and that's really what we want to convey in the letter. And what we know the hearings tomorrow, if you look at the testimony that's come out, what that discussion will be about. It's about including voices from across the industry that have broader perspectives. You know, for example, many in the industry, like Ripple, we partner with financial institutions versus seeking to replace them. We look at digital currency as a complement to major currencies like the U.S. dollar, again, not a replacement. And you know, many established companies like Ripple have been complying with existing U.S. and international law around anti-money laundering, know your customer, anti-terrorist financing regulation. So it's really about bringing in those other voices from across the industry.
So what kind of regulation would you like to see and would you support?
Something similar to what the U.S. came out with in the 90s for the internet. Regulation that was more principles-based versus very restrictive, that would, you know, really hamper innovation here in the U.S. So especially, you know, regulation that classifies digital currencies in a way that recognizes their fundamental differences. And again, you know, the U.S. really took a leadership role in the 90s at the dawn of the internet age, and a lot of that had to do with leadership from the U.S. government.
So what do you say to the folks who say, you know, this is like the wild, wild west, a lot of people, a lot of companies who just sort of want to get rich quick outside of the rules? You've got the IRS going after thousands of people who haven't paid taxes on their cryptocurrency gains. I mean, there are a lot of skeptics out there who don't understand what you're doing and don't believe in the perhaps good intentions.
Yes, and you know, within any industry at all, there's responsible actors and there's bad actors. And I think what a good regulatory framework looks like, it sets up the responsible actors to innovate and to improve efficiencies in the global financial system while washing out those bad actors. We're well beyond the days of Silk Road by now, and you know, companies like Ripple, we've already partnered with more than 200 financial institutions worldwide, financial institutions who are regulated and already are complying with existing law.
Is Facebook a bad actor or a responsible actor?
I think that remains to be seen. So far, they've published a white paper, and in that white paper, they lay out an idea to create a currency, a global currency that would be a replacement to major currencies out there. And that, you know, as Brad said on your show last week, that's ambitious, if not arrogant.
All right. Monica Long, Ripple Senior Vice President of Marketing, thanks so much for joining us today.
Thank you.
Still ahead, Microsoft is betting big on artificial intelligence. We will talk about the tech giant's latest investment in Peter Thiel and Elon Musk's OpenAI next. Consumers are looking forward to a $125 settlement check from Equifax stemming from a data breach 2 years ago, a massive one. However, hackers are using the claims as another opportunity to steal personal information. The Federal Trade Commission warning users on Twitter to be wary of fake websites claiming to be the Equifax settlement claims website. To learn more about a possible claim, visit the site ftc.gov/Equifax. Meantime, Microsoft agreed to invest $1 billion in a partnership with Peter Thiel and Elon Musk's OpenAI, gaining a prominent cloud computing customer from the artificial intelligence field. As part of the partnership, OpenAI will use Microsoft's Azure cloud services to train and run the group's AI software. Joining us to discuss, OpenAI co-founder and chair Greg Brockman. So how will this work?
All right, well, thank you for having me. So we're working together with Microsoft to build next-generation supercomputers. And the real goal of OpenAI and what we're trying to accomplish is to build what we call artificial general intelligence. So trying to build a computer system that is as capable as a human at being able to master a domain of study and being able to master more fields of study than any one human can.
So give me some examples of what this supercomputer might be able to do.
Well, so if we succeed, the kind of thing that we want to be able to do is, for example, build a computer system that can solve medicine better than humans can. If you think about how humans solve medicine today, that we do it by increased specialization. Right? You go to one doctor, I have a friend who's going through medical procedures right now where he talks to a first doctor who does an ultrasound but can't read it, so he has to go to a different doctor who doesn't really have context as to what's going on. And this is not a problem that we can solve by increasing the amount of knowledge that humans have to learn. Right? There's only so much we can fit in our minds. And so what we really need is we need tools that are capable of helping us solve these problems. And that's the kind of thing that we want to apply general intelligence to. Now,
Microsoft CEO Satya Nadella said the goal is to democratize AI while always keeping AI safety front and center so everyone can benefit. How do you police the work that you're doing, the work that these supercomputers may, in fact, in the future be able to do?
So I think that this is a really important question, especially given today's context and climate. So the way that we think about this is our goal is to distribute the economic benefits of artificial general intelligence. You can imagine that you build a system that can generate huge amounts of value. Like today, if you look at the top 10 most valuable companies in the world, 7 of them are technology companies. We think whoever builds general intelligence will be the #1 by a huge margin. It's really important that those benefits go to everyone rather than being locked up in one place. And there's a second part, which is it's really important that you keep these systems safe and secure and that you build them with ethics in the forefront. And that's something that both we and Microsoft are very aligned on doing from the beginning.
Now, Sam Altman recently joined OpenAI as CEO. He's also been sort of there from the very beginning on the ground level of this project. Elon Musk is one of the co-founders, but left the board last year. So how involved is Elon?
So Elon's no longer involved. He had to leave due to a conflict with Tesla.
Okay. So Elon Musk has talked about AI as something that could, we should fear. The apocalypse, we should be scared of how much smarter computers can become than humans. So how do you sort of balance that fear with the research that you're doing if you're the ones that are moving AI forward?
Yeah, I think what it really boils down to is that AI technology is becoming very powerful. Right? And that means that there's both these amazing benefits, these amazing applications. Imagine a personalized tutor that can really understand you that is available for free to every person on the planet. That's the kind of thing we should be able to build with the kind of systems that we want to create. But you also have to ask the questions of what are the risks? How can they be misused? Today, we already see AI technology, for example, deepfakes, that already has bad implications in the world. And how do we maximize those benefits and mitigate the downsides? And so that's our goal. Our goal is to push the technology forward, make sure that we're capturing those benefits, making sure everyone benefits from them, but also make sure that we keep it safe and secure to mitigate the downsides.
How is that a conflict with Tesla?
So Tesla is also working on AI and, for example, with autopilot. So this is an important application area for them.
Interesting. So Where will AI take us, let's say in 5 years?
So the timelines here are always really hard to predict, right? You know, like one story I really like thinking about is just looking, for example, at previous technological innovation. So in 1878, you had Thomas Edison announce that he was going to create the incandescent lamp, and gas securities in England fell. So British Parliament put together a commission of distinguished experts who came out to Menlo Park. They checked everything out. They said, this isn't going to work, and 1 year later, he shipped. And so I think that we're in a similar sort of place here where it's hard to predict what the future will be like because we're in this exponential right now where the computational power that we're using is growing 5 times faster than Moore's law. And so what we do know is every year we're going to have unprecedented AI technologies. We've been doing that for 7 years. OpenAI has been doing it for 3. And so I think that this year we have systems that can understand and generate text. I think 5 years from now, we should expect that we can have systems that you can really have meaningful conversations with. I think that we should see within a bunch of different domains a lot of very systems that can work with humans to augment what they can do much further than anything we can imagine today.
All right, fascinating and very provocative stuff. OpenAI's co-founder and chair, Greg Brockman, good to have you back with us. Thanks so much.
Thank you so much
for stopping by. That does it for this edition of Bloomberg Technology. Reminder, we're live streaming on Twitter. Check us out there at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.